Hello everyone. We've got breaking news. NIO has just announced another round of dilution, impacting US shareholders once more. So, what exactly is going on here? Well, let's break it down. NIO is issuing 70 million new shares. While this seems substantial, it actually represents only about 3.5% of NIO total float of 2 billion shares. The primary purpose of these new shares is for employee compensation and bonuses. Yes, this is another instance of dilution, but it's essential to understand this is not the first, nor will it be the last. More rounds of dilution are inevitable as NIO continues its growth trajectory. They are spending heavily on multiple fronts and rely on financial markets to support their ambitious plans. One of the significant expenses is their ongoing international expansion. Recently, there have been rumors about NIO expanding into France, Spain, and Italy. This European expansion is costly, especially considering the tariffs that make cars more expensive in the EU. Despite the potential high costs, NIO is committed to establishing its presence in Europe. For example, the massive NIO house in the Netherlands is a significant investment. It's a 6 to 7-story building dedicated entirely to NIO, a stark contrast to the smaller 2-story NIO houses elsewhere. In addition to these large-scale NIO houses, every new market entry requires building service centers and battery swap stations, which further adds to the financial burden. However, there is a silver lining. These swap stations can potentially offer grid stabilization services, generating significant revenue. For instance, in Denmark, a single swap station can earn around 200k euros annually purely from grid stabilization. Back in China, NIO is constructing its third factory, which is a major financial undertaking. The significant decrease in cash from Q4 to Q1, despite a loss of $700 million, indicates that substantial amounts of cash have been converted into assets, likely for the new factory. This third factory is expected to produce the Firefly brand and possibly additional ONVO vehicles in the future. Moreover, the ONVO brand is expanding rapidly, starting with 100 stores. Each store, even if small and designed for a single vehicle and a few sales reps, costs a significant amount. This expansion is another major area of expenditure. Additionally, NIO is offering subsidies and freebies with the ONVO brand, further contributing to the cash burn. Domestically, NIO continues to expand its network in China, building more stores and hiring more sales reps to boost sales. This expansion is crucial for achieving higher sales volumes. However, price cuts and free swap vouchers have significantly impacted their margins. For instance, each NIO vehicle currently requires 4 Orin X chips from NVIDIA, adding to the cost. The CEO has emphasized the urgent need to upgrade the entire lineup to NT 3.0 cars with NIO-owned chips to reduce dependency on NVIDIA and improve margins. The current financial strategy, including the recent 70 million share dilution, is aimed at ensuring NIO long-term survival and growth. Despite having $6.3 billion in the bank, NIO will likely continue to raise funds through share offerings while the stock price remains relatively high. This strategy is intended to support their extensive plans, including the development and launch of the ONVO and Firefly brands, and the NT 3.0 cars expected in the coming years. While this aggressive growth approach involves significant financial risk and continued dilution, it is part of NIO's strategy to capture market share and achieve explosive growth. Similar to Tesla early years, frequent dilution is a common scenario for automobile companies. NIO aggressive spending, if managed well, could eventually lead to substantial market presence and profitability. If NIO were to adopt a more conservative approach, such as halting European expansion and being more frugal with their spending, they could achieve profitability sooner. However, their current strategy is focused on long-term growth and market dominance. Let's hope it all pays off. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.